So it's a privilege being here, and whenever Outlook calls me, the reason I always say yes is I have a long and sentimental association actually with Outlook. So here's why. I migrated to India, I migrated to this city 16 years ago, and I found employment as a stockbroker, right? If you're a young, hungry immigrant to Bombay, it's one of the more easier forms of employment to find in this city as a stockbroker. Now, the problem with that was that I'd visit my relatives in Kolkata and, say, imagine a dining table conversation in Kolkata. We're going around the table, various people are saying what they do. Somebody says they're a professor in Stanford. Somebody else says they're a management consultant in McKinsey, right? So on and so forth. And then my turn would come and people would ask me, what do you do? And I would say, I'm a stockbroker, which in Bangla translates to dalal, by the way, same as in Hindi. And a hush would fall around the room that, my God, what's happened to this boy? And after all of this, he's become a stockbroker. Then 13 years ago, out of the blue, Outlook Business called, and they asked me to become a columnist. Right? So I used to write, I think Outlook Business is weekly, right? So monthly. So once a month, I would pen together 750, 800 words and write a column for Outlook Business. And that column, I think, did reasonably well. I think a few people read the column. So Bloomsbury called up to ask me to write a book, and that led to Penguin calling up to ask me to write a book. And thankfully, from that point in, when I went to Kolkata, I never had to tell anybody I was a stockbroker. I could say proudly I'm a writer, which is just fine in a Bengali family, right? Stockbroker is sort of, beneath dignity. So I owe it to Outlook for my transformation as a writer, and that's why whenever Outlook calls me, I say yes. But thank you so much for inviting me. I think it's a very pertinent topic. I thought that was an outstanding survey. Partly, I thought it was an outstanding survey because nobody asks the sort of questions they've asked in the survey, but also partly because it segues into, it feeds into what I'm going to talk to you guys about. We are used to, say, these sorts of slides, right? And this is all real data, so there's nothing wrong with the slide. Over the last 10 years, 20 years, 30 years, take any horizon you care to think about, India has been one of the best performing markets in the world. These are dollar returns. In fact, over 20 years, India has been the world's best market on a dollar basis, right? Total returns. India's returns over 10, 20, and 30 years are only matched by the United States of America. The rest of the world is actually far behind. बहुत पीछे रह गए हैं बाकी लोग. So if you look at the 10-year returns, by the way, look at the 10-year returns barring Taiwan, and Taiwan fundamentally is one company. The one company dominates the Taiwanese stock market, which is Taiwan Semiconductor. If you take Taiwan Semiconductor out, even Taiwan wouldn't be compounding much. But look at the gulf between India and America on one side and the rest of the world. I'd updated this slide last 3 months ago. I was looking at the returns last night. India now is, 10-year number is not 11.4. The 10-year number is actually closer to 12.1. So actually we've overtaken America even on a 10-year basis in terms of compounding, right? So remarkable feat over 10, 20, and 30 years to be amongst the world's top markets. No other large market is in the framework. I stress again, these are total returns, these are dollar returns, and we've been a very competitive market now for many, many years. In fact, almost my entire professional career. Now, the result of this is not just Indian companies which have created trillions of dollars. By the way, another factoid on this. Over the last decade, the Indian stock market's created $2 trillion of wealth. Other than America, no other market has created $2 trillion of wealth over the last 10 years. 60% of the world's stock market wealth, 60% of the world's stock market compounding now comes from India and America. The rest of the world has become a holiday destination. Right? These are the two karma bhumis now in the world. Now, the result of that is obviously stats like this, right? Mind-boggling stats about breathtaking financialization, right? So I'm sure these are numbers very familiar. Demat accounts have gone up 10x in 10 years. In fact, Demat accounts have trebled in 3 years, right? Last 3 years, Demat accounts have trebled, which is one of the reasons I suspect we can sit together and bask in the glory of of Outlook Money's wonderful conference. I'm sure the whole media industry associated with finance is doing well, because if demat accounts have trebled in 3 years, you can imagine the upsurge in interest in the sort of content that Outlook produces. But similarly, the other mind-blowing stat, the third bullet, MF mutual fund inflows, 10x in 10 years, which explains why this event has a fair number of sponsors of this prestigious event are from the mutual fund industry. The mutual fund industry is going through an unprecedented boom, right? If you add it all up, it comes to roughly $160 billion a year, right? We're amongst the poorest countries in the world on per capita income, right? So don't let anybody delude you otherwise. On per capita income, we're amongst the poorest 1/5 of nations in the world. But in spite of that, we are pumping in $160 billion of savings into the financial system every year, right? The combination of NPS, mutual fund, life insurance, general insurance, stock market flows, and that number has trebled in a decade. So आप absolute number देखो या growth देखो, दोनों तरीके से the numbers are impressive. And this was one of the reasons why when I wrote this book, Coffee Can Investing, 6 years ago, I thought it was going to be a steady seller, maybe 4-5,000 copies बिक जाएंगे Coffee Can Investing का. Coffee Can Investing has sold over 1 lakh copies. That's legitimately white में बिका है. Black में किताब का कॉपी इम्फाल से लेके अहमदाबाद black में किताब pirated में बिकता है. And the reason a humble personal finance book sells like this is because of the trebling of flows into the financial system. And you can understand the impact of this, right? The impact is the more money we push into the financial system, the more the cost of capital falls. So if you want to look at the cost of capital, 20 साल पहले, 20 years ago, the 10-year government of India bond, 20 years ago, the 10-year government of India bond yield was 13.5%. Today it's 7%, right? जितना पैसा आप system में डालेंगे, government bond yields drop, cost of capital drops, right? Now, here comes the less good news, which is why I thought the Outlook survey was brilliant. The maths actually is very tough in India for retirement planning. बहुत कड़ा गणित है, tough गणित है, right? So I've done some very simple maths for a middle class family. Think of a family living on 25 lakhs a year post-tax, right? मतलब Swift Desire, Ooty, Mussoorie type living, right? Not BMW, not Dubai, right? Middle class existence. 25 lakh prati varsh post-tax. And taking a cue from our host, over 40, 40 साल का इंसान, 40-year-old man or 40-year-old husband, wife, they're going to work for 20 more years, 60 पे retire करेंगे, and let's be a little optimistic, rather than living till 80, let's assume they'll live till 85. My reading is most people in our socio-economic strata live till 85. So 20 years of work, 40 से 60, and 60 से 85 retirement. 25 साल की retirement की funding करनी है, ठीक है? Assume cost of living grows at 6%, and assume over the rest of their life, from 40 through to 85, 10% post-tax return हर साल आएगी, right? I think these are pretty realistic assumptions. 6% inflation in cost of living in our strata of society is a given how expensive medical health care is going to become, and given that a lot of the stuff that we use is imported, the currency gives up 3-4% of its value each year, उसी से आपकी inflation आ जाएगी, right? Now the broad math says to live this lifestyle, 25 lakh वाली lifestyle, to live the same lifestyle through retirement, right? You'll need 1.1 crores per annum because inflation आएगी, right? So to live this same 25 lakh वाली lifestyle, you'll need through your retirement years 1.1 crores per annum, ठीक है? Now, if you need 1.1 crores from 60 through to 85, then at retirement, you need to have 6 crores of financial savings in today's money, right? If you want to inflate that, you can inflate that, becomes a much larger sum, right? So उसको 6% से inflate कीजिए, but in today's money, you need 6 crore financial corpus in today's money to live a 25-year retirement of very modest lifestyle, right? And by the way, remember, if you are one of those people who keeps thinking उसकी कमीज मेरे कमीज से सफ़ेद है, तो बस 25 लाख वाला चलेगा नहीं, तो तब तक India will be much richer, right? So this is the bare minimum. 6 crores of financial assets in today's money is the bare minimum. Now, I completely agree with the Outlook poll. I don't see too many families, even in my social circle, planning for 6 crores of financial assets in today's money. लोग फ्लैट खरीद के सोना खरीद के दे क्रिएट एन ऑलमाइटी मेस बट 6 करोड़ का पूंजी 6 करोड़ का फाइनेंशियल कॉर्पस एट रिटायरमेंट आई सी वेरी फ्यू इंडियन फैमिलीज बिल्डिंग इफ आई टेल देम दिस इज बॉस ये पागल हो ये बॉम्बे का मैथ्स है ये रियल मैथ्स नहीं है बट दिस इज द मोस्ट बेसिक humble maths I can put forward. Now the irony is this, it's actually not out of bounds even for a middle class family at the age of 40 to create a 6 crore ka pot in today's money. Because all you need is 90 lakh ka lump sum at age 40. If you take a 90 lakh ka lump sum at age 40 and you compound that at 10% per annum post-tax for 20 years, you get to the relevant figure. But to do that, you need to have the clarity of thought that this is the path, right? I think Ms. Sinha's Urdu wala quote made it sound very elegant, and I agree it was a lovely quote. But I think path सीधा है, सरल है. It's a very doable, seeable path. But I think what's happened is a lot of people, including people in our industry, have willfully made the path blurry. Path बहुत सरल है. 40 के age पे think of a 90 lakh lump sum. और से between 40 and 50, build a 1 crore का lump sum and उसको compound करो steadily at 10% per annum post-tax. The market will have good years, the market will have bad years, but to get a 10% post-tax compounding figure steadily for 20 years is very doable and that will give you a decent retirement. But if rather than doing that, आप market में चढ़े top पे, निकले bottom पे, flat खरीद लिया इधर उधर, कुछ VC वगैरह कर लिया, प्राइवेट इक्विटी में पैसा घुमा दिया, and you carry on doing the fashion of the day, then life gets really tough. Now, I know it's bad to give bad news, but this is news straight from the RBI. So मेरे को दोषी मत ठहराइएगा. This is RBI data, right? We are in a savings disaster in our country at the moment. The net savings rate, net savings मतलब savings less borrowings. RBI data, RBI के पास दोनों हैं. RBI has data of savings, RBI has data on borrowings. The net savings rate is at a generational low, right? And reasons are not hard to find. If you go to the Apple store in the other Jio का जो shopping mall है, you go to the Apple store there, go to a Vijay sales, you'll see 90% of mobile phones are being bought on credit, right? Forget mobile phones. You go to any e-commerce site in India, you will see clothes, books, even my books are being bought on credit. Imagine the irony, people are buying coffee can, investing a book on personal finance on credit, right? So because of the upsurge in credit, right? Because of the easy availability of credit, we've seen a massive jump in personal debt. So forget the savings piece, people have jumped up their personal debt, right? And we've ended up with savings rates 5% of GDP, right? 5% of GDP. We are now comparable to the emergency days of Mrs. Gandhi, right? Now, there's another driver behind it. We celebrate the rise in demat accounts as we should. But if you see the data from SEBI and what, say, the Zerodha founder has very eloquently put it, much of the demat accounts is not investing. It is day trading. Right? SEBI का data दिखा रहा है, SEBI का survey data, and I think SEBI should be commended on this. 90% of F&O traders actually make no money. It's basically a disguised form of gambling, and there's been plenty of literature put out about how India has become a market where F&O trading volumes have become many 100x the value of physical trading, right? So much of the financialization that we are seeing, much of the Josh Farosh that we are seeing is actually not savings. It's either young people borrowing large sums of money to make investments in things like mobile phones, holidays, and consumables, or it's speculation, gambling on stock markets, which the Zerodha founder said went one step further. SEBI ने बोला 90%. Zerodha founder said, I think 98% of Zerodha clients, he said, make no money. सारा दिन घुमाते हैं पैसा, but पैसा बनता नहीं है. So this, in a way, is both a challenge for the nation, but it's also an opportunity for our industry, right? Because it suggests a whole generation of Indians who are working in good jobs, earning money, but the savings rate has become a disaster, right? So करना क्या चाहिए? My submission to those who are listening here today, last 10 साल में we saw a 3x jump. Last 10 साल में we saw a 3x jump in financial assets. Next 10 साल में I think we need at least a 5x jump. The maths I have done suggests at least 5 गुना jump चाहिए. So we went from 50 billion to 160 billion dollars of savings per annum. I reckon we'll comfortably have to move from 160 billion to excess of $1 trillion of savings per annum. I'm also confident ये होगा. I reckon we'll be doing 10 years hence if Outlook invites me back. I'm sure we'll be discussing with the good folks from Outlook and their readers that India $1 trillion plus कर रहा है, $1 trillion से ज़्यादा करना पड़ेगा. Now, it's not just a question of rich people in Bombay, Delhi doing $1 trillion plus. We need to get this message spread out, right? So India has roughly 400 million families, right? There's obviously a bunch of families who are below the poverty line, no point bringing them into the discourse. So in terms of middle class families, we're looking at roughly 200, 250 million. Out of those 200, 250 million, I can confidently tell you 100 million are heading for a retirement disaster. Right? 100 million families heading for a retirement disaster, वो हमारे लिए opportunity set है. Right? We are working through my books, through Marcellus, I'm working to figure out how to help those 100 million families save more. Now, the most effective form of savings I can see in India is NPS. So I'm a big user of NPS. Other than Marcellus, जो भी मेरा पैसा है NPS के अंदर है. It's a very effective form of saving. 7 लाख करोड़ तक पहुंच गया NPS का AUM. But I think NPS again will need to become 10x its amount. Now NPS में, it's a great product. So for quick background for those who don't know, there's a ceiling on the fee. It's sort of staggered, but assume that no pension provider can charge more than 9 bips, right? So say my NPS account, the maximum fee is 9 bips. I think my provider actually only charges 6 or 7, right? They put my money in tracker funds. I give money to the NPS. My employer, Marcellus, contributes. That money is put in a tracker fund, and tax-free, that money compounds. I pay tax on my income though. There is a part of NPS contribution which is tax-free. The employer's contribution is tax-free. The compounding is obviously tax-free. When I take money out of NPS, I'll have to pay tax then. But I think there are certain clauses around that which are being worked upon. In fact, yesterday only, a new clause came that I can take up to a quarter of my NPS money out to pay for my children's education, right? So it's been a very effective scheme. There's one glitch, and if there's anybody from the government in the audience, if you could take this message to the PFRDA, I reckon if the ceiling on NPS fees, the ceiling at the moment is 10 bips. 10 bips से ज़्यादा pension fund provider charge नहीं कर सकता. अगर ये 10 bips की जगह ये ceiling 20 bips होता, अगर ये NPS का price ceiling, fee ceiling 10 की जगह 20 होता, my discussions with the pension fund providers suggest everybody will jump onto this. Becomes a very effective mode of wealth generation for the public. It becomes profitable for the big pension houses, many of whom are sponsoring this prestigious event. Right? It becomes a very profitable product for the big pension houses. So my request to the government is if you could consider raising the ceiling on NPS pricing from 10 to 20 bips. Right? It's a good product. कुछ और बदलने की ज़रूरत नहीं है. बाकी चीज़ अच्छी है. The private sector will drive this, and millions of Indians will save effectively for retirement. Now, और एक तरीका भी है. अगर हम US से कॉपी करें एक चीज़ और एक चीज़ कॉपी कर सकते हैं. If you look at America, it's not as if America has had a roaring stock market story for many decades. That's not the case. Right? Venture capital in America only started properly around 1980. And the American stock market as a medium of mass savings, the American stock market as a medium of mass savings only took off in the mid-90s. Right? 94, 95, the American stock market took off as a medium for middle class retirement being funded through the stock market. और उसके पीछे सबसे बड़ा driver था 401k. So the 401k construct in America, is when you put money in your 401k account, तब आप टैक्स नहीं भरते. You basically save tax free, you invest tax free. आपके 401k अकाउंट के अंदर आप जितना मर्जी खरीदा बेची करो, there's no CGT. It's when you take money out to fund your retirement के लिए घर खरीद रहे हो, जो भी खरीद रहे हो, रिटायरमेंट के जब पैसे निकाल रहे हो तब आप टैक्स रेट भरते हो. right? If the government could consider creating a 401k construct in India, and I have a vested interest here, I work in the PMS industry, Marcellus is a PMS provider. PMS industry के लिए बहुत लाभदायक रहेगा if affluent people like you get a retirement account जिसमें आप पैसा tax free डालोगे, आपकी savings और investing tax free होगी, लेकिन जब आप retirement के लिए पैसा निकालोगे, at that point you pay tax. I think that too will give a fillip to the whole savings industry, right? But my reckoning is at the moment where we stand, 100 million families are at risk. 100 million families, middle class families, I'm not talking BPL, वो दूसरी story है, right? 100 million middle class families are at risk of not saving enough. The basic maths of retirement is not being explained clearly to them. अगर समझाया जा रहा है तो बोल रहे भैया बहुत बड़ी रकम है, this is too much of a ask, we can't do it. And I think there was a lovely slide in the Outlook survey where families are saving for children's education. They're even saving for health exigency. But retirement के लिए केवल 30% families save कर रहे थे. We're going to store up a retirement planning disaster. There's no need to do so. NPS is a great product. I think that can be tweaked. And if courtesy, there are enlightened people like Mr. Shenoy in the room. You'll speak later today, right, Deepak? If you could expand on the subject, because he's working with the regulator on this subject, about how do we get a retirement account construct going in our country. That'll be awesome, right? And for those of you who are interested more on these sorts of discussions, I realize this is, I thought the Bollywood riff in the survey slides was awesome. I didn't have a Bollywood riff. I wish I had. I had just my boring books to put up. But if you like this sort of gupshup, कहाँ पे पैसा लगाना चाहिए, कितना लगाना चाहिए, so Spotify पे हमारा एक podcast है. You can listen to that. It's a Hinglish जिसको बोलते हैं, Hinglish का podcast है, and it's available on whichever platform you use. But thank you so much for giving me this opportunity to address this august audience. Thank you, Outlook. Thank you.
Thank you so much. Saurabh, since we have the opportunity of having you here, and I can see we have a couple of more minutes with your permission, can I throw the floor open for
Absolutely.
any questions? Yes? Ladies and gentlemen, if you have any questions for Saurabh, please raise your hand. Okay, I can see one hand go up there. Can we have a mic, please? So can you please raise your hand so we can identify you? All right, we'll come to you next. Sure, go ahead.
Good morning, Saurabh. Thanks for the insightful session. So one part which you mentioned about like data about the credit and even mentioning things being purchased on the credit card, including your book. One thing which happens from the marketing perspective is that the credit card provide a lot of incentives in terms of making the purchase on the credit card. So while the people might be purchasing the credit card, they end up paying the money before the due date using their saving. So considering that transactions happening on the credit card, actually the real consumption of the credit, or is it like a disguise?
So आप पूछ रहे हो, is it real consumption on credit or it's disguised? But वो remember net out हो जाएगा. If someone's using the credit card and immediately extinguishing the balance, तो it net out हो जाएगा, right? Neither bank के loan growth में दिखेगा, nor RBI के data में दिखेगा. But as you're seeing, banks' credit card books are growing rapidly, and RBI's data is also showing rapid growth in unsecured lending, right? So much so that I think in November, Shakti Das ji increased the risk weights associated with unsecured lending. So if someone's using the credit card and then turant repaying it on a almost like a EMI immediately on an automatic basis, तो credit card books grow नहीं करते. You can see especially in the private sector banks' books, the fastest growing part of the book is unsecured credit, and even more worryingly, I would say unsecured small ticket credit, 10,000, 20,000, 30,000. So I live just to sort of tell you why I'm so super worried about this. I live in a pretty affluent part of Bombay. Whenever I go to the Chroma in my neighborhood, they say 90% of everything, washing machine, pankha, music system, phone, 90% of everything in my affluent suburb of Bombay is being purchased on credit, right? So I said, it's a little strange, because I thought I lived in a very affluent neighborhood. When I go to a less affluent part of Bombay, जहाँ पे मानिए mobile phone की दुकान में गया, वहाँ पे 90% of phones are on credit, right? So wherever you go in the country, a credit boom is underway. Now, there's good things about the credit boom, especially where, say for example, the lady who cooks for us, she's buying a 12 lakhs ka house in Diva. सो आई थिंक पीएम आवास के तहत उनको 2 लाख मिला है और 10 लाख का मॉर्गेज मिल रहा है. दैट्स आउटस्टैंडिंग. आई थिंक that's credit growth that I can believe in. This is good stuff. I met an auto rickshaw driver in Kolkata 2 weeks ago. He's bought a house in the suburbs of Kolkata. Same deal. PM Awas में पैसे मिले हैं and home loan लिया है. But the growth in credit which is worrisome is unsecured and especially small ticket unsecured. This whole buy now pay later is a challenge. And the RBI data is showing that up as a challenge. Credit to the RBI, they moved partially to address the issue. Second leg of the challenge, much of the financialization doesn't seem to be retirement planning or savings in any effective means. It's basically gambling. It's gambling using the stock market as a gambling den. That's also going to end in tears at some stage. And if you add the 3 things up, you're doing buy now, pay later, you're doing gambling in the stock market, and finally, आप तो भूल ही गए सेविंग्स करना, वो तो आई थिंक आउट ऑफ द विंडो है, which is why I thought it was such a laudable initiative to launch this. It's just that 40/40 के generation में दिक्कतें हैं. Perhaps even in younger generation, people in their 30s need to be brought into the fold.
Thank you, Saurabh.
Thank you so much for your question.
Saurabh, hi, Pramod here. With so many wars and hostility all over the world, I know you cannot time or predict, but do you foresee another black swan event soon, therefore decimating markets, and therefore we're all sort of going to be set back? What's your sort of crystal ball gazing, if you will?
Sure. So look, I think wars unfortunately have been good for stock markets, right? Because especially wars in countries which are far from the main economic hubs of the world, right? If you assume the main economic hubs of the world are basically America, China, India, Southeast Asia generally, right? Wars in places which are far-flung, thinly populated, which stoke economic activity because you fire up the military-industrial engine. So as you must have read, the American defense machinery is now in high gear. The European defense machinery is high gear. India's own defense spending has revved up. So wars per se is not the challenge. I think where the challenge kicks in is China is a giant economy in free fall. China is a giant economy in free fall. And as the Chinese economy plunges, they're dumping. They're dumping with vengeance on the rest of the world. They're dumping, for example, chemicals in India. So May through to October last year, the Chinese cut chemical prices by anywhere between 30 to 60%. And obviously, it's hammered the profits of specialty chemical companies, including the ones we invested in. Now, it'll be easy for the government to say, chalo, humne anti-dumping dal diya, right? But even if the government imposes anti-dumping duties on Chinese chemicals after the elections, an Indian producer will say, अगर Chinese माल सस्ते में मिल रहा है सिंगापुर में, मैं खुद जाके लेके आता हूँ, right? And therefore, our chemical industry will face a challenge, right? I'm using chemicals as an example, but you can extrapolate to toys, you can extrapolate to a whole bunch of things that China makes cheaper than the rest of the world. So Chinese economy seems to be in a long-term structural decline. And as they blow up, how much stuff they will dump on the rest of us, I'm not so sure. And what that implies for our aspirations to become a manufacturing center, that's where my biggest concerns lie. So people far above my pay grade are deliberating on this subject in Delhi. Hopefully after the elections, we'll see some policy decisions on this subject.
And did you just discard F&O as an investment option?
Yeah, I've never quite been able to understand how I can make money in F&O. Right? There's only a few counters which are reasonably liquid. And even there, actually, it's very interesting you raise the question. So we have this insane surge in F&O volumes, right? But if you look at, say, 1 year out options, right? Long-dated options, very little liquidity there. And if you look at options, say, with companies with market cap of $3-4 billion, very little liquidity there. So had the upsurge in F&O led to broad-based improvement in liquidity in F&O, far-dated contracts and contracts beyond the Nifty, that would have been nice. But वो भी नहीं हुआ है. In a limited bunch of F&O contracts, we are doing, I think, weekly settlement हो गया, right? Weekly settlement, right? I think America has monthly or bi-monthly. We have America also has weekly. So हमारा weekly हो गया है, and I hope we don't go to daily settlement, right? But the growth in F&O volumes hasn't coincided with broadening of or deepening of liquidity in F&O, and that's a little disappointing.
Thank you for your question. Sir, can I request you to please pass the mic to the gentleman behind there? There. Yes. All right, sir, we'll come to you next.
Hello, sir. This is Bhavesh from DB Investment Advisors.
Hi, Bhavesh.
So my question is regarding the broader sense of the market. So if you see the recent run-up in the mid-cap and the small-cap space, so what do you think about the whole debate of timing the market versus time being invested in the market? So what is your advice for the fund managers specifically following the dynamic asset allocation approach, where they are trying to move away from the equity and then just going to the bond and other asset classes? So what is your view on the, like, how should fund managers should play out the current phase of the market? That is one. And second thing, like if we think about the banking sector as a space, and we talked about the financialization of savings, so do you see that as a negative, like banks are not able, like the current deposits, the saving deposits are currently at low, and most of the money is going to the markets and the mutual fund industry. So do you think it has a negative, like the lending on the lending cost of the banks? So like these are the two questions.
So let me take your second question. Your second question I think is very interesting. I agree with you that banks will have to fight far harder for customer deposits because, say, a youngster like you, as soon as you get your salary, you can do a SIP immediately to the MF industry, right? So why will you leave your money lying in a SA account for 4% or 6%, जो भी हो, 4, 6 जो भी हो, while you leave it lying there if the good folks who are sponsoring this conference do an SIP for your generation, right? So आपके account का float घट रहा है, and I think millions of youngsters like you are savvy, तो आपका float घट रहा है. And therefore, I agree with you. Banks will have to offer more by way of better rates to your generation to hold on. Where I think the banks will win, though, is as the economy formalizes, a far broader section of the population will have their monthly salary payment put straight into their bank account, right? Many of you in this room would have seen, I see it in my life, you'll be seeing it in yours. Our cooks, our drivers, increasingly we pay them directly into the bank account. And for that strata of society, perhaps the float will increase, right? Now, which of these two forces offset each other is hard to say. My conservative instinct says that the banks will have to offer more for SA to persuade you to keep your money there rather than whipping it out straight through an SIP into a mutual fund construct. That being said, there's also a cyclical element to it. The cyclical element is liquidity is particularly tight at the moment. The RBI, my sense is on the other side of the elections, the RBI will make liquidity easier in the banking system. So the banking system today has a double problem. There's a structural issue, which is youngsters like you whipping out your money very quickly and putting it into the stock market. And there's a cyclical issue, which is liquidity is particularly tight as the RBI is trying to squeeze inflation out of the system. वो शायद election के बाद थोड़ा relax होगा, right? But I think on balance, we should expect to see the banks offering us, all of us, more for our SA. On the other subject, your other question is basically on should a fund manager get out of small cap, get into, say, government bonds, come out of it. I think two aspects to it. Firstly, in the context of the discussion we are having, it's not clear to me that a retirement advisor or indeed a middle-class saver will have that ability to time the market. And hence, I think far better for them to be given that long-term perspective. Think of a 10-year horizon, think of a 20-year horizon, think of 10% post-tax as your target savings rate. And as you save money, keep putting it into ETFs, pension, NPS. You can even have an active mutual fund. But करते रहिए rather than trying to do gymnastics about अब मैं घुसूंगा, अब मैं निकलूंगा, war के पहले, war के बाद, election के पहले. That gymnastics, I think, is utterly destructive. And I don't believe too many advisors or fund managers or savers themselves can get the gymnastics right. Plus, as I said, the core challenge is there's 100 million middle-class families who haven't done enough savings. Timing छोड़िए उनके लिए, savings का मुद्दा, core, मतलब मूल सवाल उनके लिए, मूल सिद्धांत की पैसा डालिए और दबा के financial savings में वही उनके लिए सबसे अहम मुद्दा है.